Imagine you're coming to a hairdresser and the only one question you get is, how do you want me to cut your hair? Or imagine you're going to a luxury flower boutique store to buy flowers for your very special occasion, and the only one question you get is, which flowers do you want? I often get questions from friends and different people. They can just call me and say, hey Ala, I have a condo in this area, this is what I'm paying, this is what I'm losing, this is when I'm refinancing, what should I do? Sometimes the numbers are concerning and people may be losing 1,000 a month, or they may be anticipating losing even more after they refinance in the current market. And I'm really concerned, and usually those are people who are dear to me. Sometimes they're strangers, but um, I always feel, I always take it very close to me, and I always try to answer the best I can, in the best way I can answer that question. But the problem is that in most cases, I can't give the answer within 5 minutes. And the reason is very close to what I mentioned in the beginning of this video. If it's just one question, what do I want to do with this money? Well, that's actually a really good question. So if the question would be just what should I do with, what do I want to do with the money invested? Then if they want from me just that simple advice, or to sell or not to sell, then there would be no answer coming from me to bring any value into that conversation. What I usually need to ask, and what I usually ask, is that what was the goal you kept in mind when you invested in that condo or in that property? What do you want that money to do for you, and when? And the second question, usually following that, what are your alternative ways to reach the same goal? Why I'm asking these questions? Because even, for example, your condo is bleeding cash and you feel like, oh, this is just unbearable. Maybe you're right, but maybe if your long-term goal is your retirement, and you know that this is just temporary situation, and maybe with the payout that you do towards your premium, you're not that bad. So the question can be, should I carry this with the monthly loss of that? Or should I sell with the loss, considering with the loss in equity, in value, considering the situation on the market? What should I do? Well, that's a very hard question. We cannot answer that without knowing where you want to go and what are your alternative ways to do to reach the same goal. And when I say that, that means that you need to understand that it's easy to stay in the deal. It's harder to leave the deal, because real estate is is a machine which is very heavy, and that inertia is significant. And to get in or to get out, you really need to experience a lot of that traction. And if you decide to leave that, not only you consider how much it costs you to stay in there and how effective your money work within the deal, but you also need to consider what would be your other ways to make that money work towards the same goal that you initially had for that in other scenarios. Is it going to work for you, or maybe not so much? So think about that and make sure that you understand that. So without understanding these two pieces, anyone who gives you an advice really just projecting their own experience or their own interests on you. You either need to take the full responsibility for making the decision, or provide way more information for the person whom you're asking the advice from. Similar dilemma we see when people decide between investing in real estate as equity partner or as a private lender. Equity partnership is that when you invest some money and get a portion, a fraction of that building, and you become the real owner of that of a part of that building. And that comes with a lot of benefits. You are leveraging other people's deal, you're leveraging other people's time, you're leveraging other people's money, because you're also enjoying the benefits of borrowing money from the bank and leveraging that. You're also enjoying the passive ownership. It comes with cons as well. You have way less control. You have risk in you share the risk with other partners in case if the deal will go down in any sense. And that type of investment takes usually way more time to execute. So you need to wait longer. If you invested as equity partner, most likely you will be waiting for, say, in current market, I would safely say 5 years until you are getting your money back. The other option is private lending. So it can be either hard money or it can be a private mortgage. In both cases, you don't take the risk in case if the deal will go south. You also don't need to get locked in the long-term investment. You have even lower involvement than in the previous scenario. The cons of this type of investing is that you don't get any shares in the success, which may happen and most likely happen in some scale when the deal is stabilized and the building is growing in its value. You only will be getting what you agreed on, and nothing else. You also are risking that the borrower can become a default. That also happens. In that case, you're more protected if this is a private mortgage and less protected if that's a hard money lending. But again, those risks, they're more reflected in the amount of your annual interest. And the main idea is that there is no right or wrong. Actually, they may be wrong, they may be bad. So there is no right or wrong, but usually that's about good and bad fit. And your role is to either, again, take the full responsibility for the decision you're planning to make with that condo or that investment real estate property. And your role is to either educate yourself and make the full accountability for any decision you're planning to make, whether to sell that property or keep that property, consider all other alternative ways to reach the goal, to know the goal, or to ask that question from someone else, someone who may be able to know the answers and help you with that. Ideally, if they did that themselves multiple times. The other thing I want you to understand is that when I say your goals, it doesn't mean that you only have one goal and no other goals. What I mean that every pile of money has their goal. One pile, and you should have it, is for your retirement, for your legacy, for protecting your children in far future. First pile is usually low risk, steady growth, long term, don't touch it, forget it. Second is maybe mid-term, higher risk than that one, higher return, building that wealth, and making sure that you actually create those streams of passive incomes we're all dreaming about. You may even have another pile, say, exclusively for crazy transactions. Maybe you're investing in meme coins. Maybe you are investing in unicorns businesses and things like that, and being, I don't know, like angel investor. But there are different piles, and you need to understand the goal for each of the pile. And don't move money having one goal to a vehicle that actually suits well the pile with another goal. Don't mix them. Don't put your retirement funds in Bitcoins. So just think about that good and bad fit. If you have any questions, feel free to send them to me. I'm happy to answer and happy to chat. And see you next week.